Hello, everyone, and welcome. Thank you for joining today. We've got a very interesting and emotive topic, I think, for discussion. Now, not so long ago, if someone mentioned the word disruption, it usually meant you did something bad in the classroom or something. I mean, now, of course, innovation and disruption means something very, very different. So today's topic is, how can insurers embrace innovation to drive growth? I think it's interesting because everyone's talking about it, and it's emotive because it's such a broad topic, and there is a lot of pressure on the industry to innovate and meet what is a very changing marketplace and customer needs. We've got a very, very excellent and diverse panel today that's representing industry, venture capital, and also solution providers. So I'm really looking forward to this, to getting a diverse set of perspectives. Before we start, I'd like to remind the audience that you can put your questions in the Q&A box, and please do ask questions. We've got about an hour or so. We'd like to make this interactive. So without any further delay, let's kick off. I'd like to start with a round of intros. So let me kick off first, and I'll then ask the panelists to introduce themselves. So my name is Preetham Peddanagari. I'm a partner at EY, and I lead our insurance tech business. And as I said, very much looking forward to the discussion. Why don't we go to Roy? Roy, if you can introduce yourself.
Hi, good afternoon, everybody. Roy Jubraj, Chief Strategy and Transformation Officer at esure. I joined the business about a year and a half ago now. Feels a bit longer. And prior to that, I've been at Accenture for about 23 years within their digital transformation and innovation streams within financial services. It's great to be here.
Thanks, Roy. Emmanuel?
Yep, sure. Hi, everyone. So I'm Emmanuel, working for RGX, which is the transformative engine of RGA, the life insurer. I've been at the organization for about 3 years, so working with different partners, insurers, insurtech, all over the region of Europe, Middle East, and Africa for innovation, new product, new services. And yeah, I'm very happy to be part of this panel with all of you guys.
Thanks, Emmanuel. Carl?
Yes, hello everyone. Thanks for inviting us. I am Carl Bauer, founding partner or co-founding partner of EOS Venture Partners. We are a venture capital firm exclusively focused on insurtech. Started 4 years ago with a $85 million fund. We work with the insurance industry, not against the insurance industry. All our LPs are insurance companies from America, Europe, Canada, and Asia, and are working in a very close symbiosis with them under what we call return on innovation and investments. We have made so far 11 investments. Our sweet spot is Series A, and are investing globally with most of our portfolio in the US, in Europe, and to a lesser extent in Asia.
Thank you, Carl. And Marcin.
Hi guys, good to be here. My name is Marcin Kurczap. I'm based in Warsaw, Poland, from PZU. I'm a head of Innovation Lab, which is an entity which cooperates with top insurtech and fintech startups in Europe and in Poland. The mission of my team is to test and implement new technologies at PZU Group. To those of you who are not familiar with PZU Group, we are the largest insurance company in Poland with over 30% market share in life, non-life, and health insurance business. So kind of incumbent in Poland, and happy to be here and share our experience in terms of cooperating with startups.
Thanks, Marcin, and thanks everyone for the intro. So before we start the discussion, again, a quick reminder: please do send your questions via the Q&A box. So let's kick off the discussion. Now, I think it's difficult to do a webcast these days without talking about COVID, and I hope to do one of these in person soon, hopefully. I think it's fair to say there are a number of industries, pharmaceuticals, healthcare. There's actually been a tremendous amount of innovation in the last 12 months or so. In fact, unbelievable amount of innovation if you look at the progress on the vaccine and stuff. So my question is, what about insurance? What have you seen? Has the commitment and drive to innovation, has it increased? Has it decreased? I'd like to start by getting a perspective from within the industry. So maybe, Roy, if I direct the question to you first, and we can get the panelist views as well.
Yeah, that's great. Thank you, Preetham. I think most definitely the appetite for innovation in the sector has increased significantly, probably on three fronts. The first is the customer's appetite to want to actually engage more digitally. Because I think, from our perspective, we feel that customers have been a lot more comfortable in the adoption rate and the pickup. From a digital adoption side, and we've seen that cross sector, mostly in the insurance sector. We've definitely seen an uptick in that. So from that perspective, we have good hope and aspirations that the adoption rate and the capabilities that we are focusing investments and energy on will be leveraged and utilized in the right way. From a proposition perspective, most definitely, right? So we've seen a reduction in car usage for motor insurance on the ground. And, customers want to really think about paying for what they're using. And so, classic UBI type capability, we've seen a significant uplift and the intent and need for customers to want that. And also, how do they cater and personalize their propositions and their needs in a much more, I think, ways tied to their lifestyle. So from my perspective, I think the sector is actually seeing some significant change in terms of how we're actually thinking through that, what that might look like. The other aspect is more probably of what I would call ways of working and how we need to operate. We've been a pretty old school sector where everybody's in the office and working together. I think what we found is location is not a detriment, and that's helped quite significantly around how we recruit, how we look at different talent pools, and how do we actually think about ways of working in the future and what that might look like in terms of our future operating model. So that's less around the sector base, but it's more about how we actually think about how we might want to operate and how we take some of the learnings in other sectors and startups environments and the insurtech world in terms of ways of working and how we might want to operate. So definitely, I think the appetite's increased quite significantly in terms of innovation.
Yeah, thanks, Roy. I think, fair to say that some of the, news over the last 12 months from an insurance industry perspective, some of it hasn't been so positive. But actually, I agree with you in terms of actually the drive for that's created real kind of positive momentum to drive, products suited more to the customer need, and some of the concepts you were talking about. And actually, the last point is interesting as well. Lloyd's, which we see as the last kind of bastion of face-to-face trading, overnight switched to electronic trading, and we were all being told that's never going to be possible, but that kind of happened instantly overnight, right? So that was great. Maybe if I get to Carl's perspectives from a venture capital, what are you kind of seeing, slightly kind of outside in lens, but with the sort of the investments you're making as well?
So the willingness to innovate has never been, I think, bigger. COVID is taking any excuse away from the industry of not accelerating innovation and digitalization. What we saw before COVID is that the interest was already very keen, but with a certain sense, not of complacency, but of, there is enough time. I think this has given a huge boost to everyone realizing that things are accelerating, and also making, customers ever more digital friendly, and raising the expectations of what kind of innovation, notably on the customer journey, especially when you're stuck at home, is going to be available as an insurer. And this is for retail insurance, but it's also for SME insurance, I mean, the large commercial risk is always a bit different, a little bit more complex, but I think there's been an enormous push on the innovation, and we see this both on the LPs, on our insurance LPs, as well as also in terms of the drive of innovation from new startups now hitting virtually every part of the value chain in insurance.
Thanks, Carl. So moving on, Martin, I'd like to direct this question to you. And my question is, what's the right model for innovation within a corporate organization? Is it from you try to innovate from the inside? Do you sort of isolate the innovation engine from the core business? Do you get into a partnership? And the reason I'm particularly interested in your views is, I mean, as you said, PZU is a pretty huge organization. They're as big as they come. Plus, from memory, I think you were till recently state-owned as well, which I'm sure presents a kind of a different kind of set of challenges. So yeah, keen to kind of get your perspectives.
Yeah, thanks. So it's a very good question, and I was asked this question 4 years ago pretty often when we were launching Innovation Lab. So it's not so obvious, but at the end of the day, I believe that it depends, and it depends mainly on what is your end goal. So the more disruptive innovations and solutions you would like to launch and put into life, probably the better for you is to isolate from the core, because otherwise you will have a problem to challenge the status quo, etc. Yeah? So it's quite healthy to make it outside. But on the other hand, if you are keen to transform and innovate on your core value proposition, core business, which is the main goal of PZU at this moment, because we have enormous business. So I'm laughing that every 1% of efficiency improvement in our mass processes are like translating into millions of savings. So we definitely want to innovate on this core part, and sometimes do also some status quo changing innovations. So in that way, when you are looking into transforming your core operations, I would guess that insight is much better. But of course, it's not so simple. So from my experience, if you want to run Innovation Lab, which is really delivering value to the business, there are two crucial points to be met. The first thing is to have a buy-in in your organization. So you have to be like a team that has trust from business entities. They are open to share their problems and challenges with you, so you know where to search for startups and new solutions. So this buy-in is very crucial, and this, of course, it requires time to build it. And the second thing is that, in my opinion, of course, Innovation Lab should not be another entity that is like consulting the business ideas or giving opinion, what should we do, what we should not do. The approach that is working quite well in our case is hands-on team. So we are delivering value to our business, that we are supporting them in the process. We are giving, power, budget, and people to move things faster and to have them done properly. So that's our approach. And yes, we are still state-owned, and this is like one of the factors to have into consideration when making decisions about projects. It could be advantage or disadvantages, as we all know.
Yeah. And Martin, follow-up question on that. So did you face any cultural challenges where you had sort of part of the organization sitting in a innovation lab, as you say, part of the organization sitting aside, and create some sort of a divide that actually set of people are working on cool projects, so to speak? and the other ones
Yes.
are not, and how did you tackle that?
Mm-hmm. So I would say that it would be a mistake to think that all people are interested at the same level to do change and to make innovations. Yes, we are only people, so part of us are more happy to have status quo and to run business as it is and to not change things. And there are also innovators who want to transform the business, and the role of Innovation Lab and my role is to find people who want to change PZU to run their business in a new way, better way. Of course, the group is growing and growing year by year. When they see our track record, it's much easier to make business with them. We were starting 4 years ago with 2 projects. Right now, in our portfolio, we have around 10, 12 projects at once. Yeah, so it's like a portfolio management right now. And in terms of culture, I think that you have to be very wise when making these innovations with PZU, because it's a very sensitive matter. Yeah. So, for example, what I'm laughing with that, but it's one of the very important points at PZU. When our projects are not successful, so we have a failure, I'm the one to be blamed. Yeah, so Innovation Lab has a possibility to fail, and this is Marcin Kurczak who's failing. Let's say like that. And on the other hand, when our projects are successful, you will not see me or my people on awards ceremony. So the business owners will go and they will have their awards, and we are trying to position themselves as the winners. Yeah. And on the other hand, we are giving them support in terms something will go wrong. We are the one who can make mistakes.
Yeah. No, yeah. I mean, in terms of, I think you didn't use the word, but kind of that fail fast sort of concept, I think is sort of important as well, right? So maybe I'll sort of open up to see if the panelists have any views on that. I mean, Carl, you kicked off the discussion saying you're again keen to, and equally Emmanuel as well, so keen to kind of get your perspectives.
Sorry, there was some noise in the line. Sorry, was that a question to me?
Yeah, so Carl, I was just saying in terms of kind of the model for innovation, I was just sort of reflecting on the point you made around, insurtechs have very much become about partnering as opposed to disrupting, if you like. And what's the model kind of you're seeing?
We see a lot of different models. I think that all the insurance companies are trying to adapt to a new reality around a concept of trial by error and trial by failure. I think that is quite a new concept in a quite traditional and heavily regulated industry, where error is not really part of the vocabulary, failure is not really part of the vocabulary, and as a result, I think that the insurers have taken their time to adapt and are taking their time to adapt to that new reality. Some are doing it better than others. You've got some very large insurers who are doing it very well. Others less well. It's interesting to note that even though it's easy to write off smaller and medium-sized insurers because they don't have the scale benefits and they don't have the capital benefits and the diversification benefits of the larger ones, they have one major advantage, and that is of shorter hierarchies, of shorter reporting lines, of less complex organizations. And we see some interesting examples emerging out of much smaller insurance companies who are quite swift in trying things out and bringing change, innovation to their customers. It's interesting to note also that the reinsurers, somewhat unsurprisingly, have been in many cases very good at bringing innovation. They are at the source of a lot of competencies, data, expertise, have less conflicts to manage with heavy, complicated distribution entities, lesser risk of cannibalization. So we have seen, the reinsurance industry picking this up quite rapidly. Some notable leaders in there, as well as I think the brokers taking this up with a vengeance in terms of trying to partly reinvent themselves and seeing that there's an opportunity in intermediating the innovation drive, which is in the industry. I think overall the insurance industry has a cultural heritage, as I said at the beginning, which is not to embrace risk and not to embrace too much change, because that's really not what it was all about. And I think there's a cultural shift which needs to happen. I think it's definitely there among the younger generation in the insurance companies. The need is definitely required among the leadership of the insurance companies. I think the middle layer, which has been used to do things in the same way for many, many years, if not decades, is proving to be a harder nut to crack.
Yeah, no, I agree. Emmanuel, so Carl talked about kind of a broker perspective. Roy earlier gave a kind of retail insurer perspective. What's your view from a life insurance perspective in terms of what are you seeing?
Yeah, well, effectively, Carl just mentioned the reinsurance, right? And I'm part of a reinsurance company, and this is true that we're looking at innovation with big eyes, because the true element here is that we're seeing that there's so many new incumbents. So before you are, as a reinsurer, you are looking at partnering uniquely with insurers. But what we see in terms of innovation is, first of all, when we talk about innovation in insurance, we need to be aware that the insurance industry has always been innovating. The innovation was not the one that we think of, because we're thinking of digital innovation, distribution innovation. But if you look at products, the product itself, some product hasn't changed a lot. But in the past, for example, if you look 10 years ago, 20 years ago, we didn't have any critical illness product being sold in some markets. Now they are. We didn't have, talking about life insurance, there is some other product that we didn't have in the past that are already in the market today. So the innovation has been. I don't believe there's any organization that can stay longer in the market without innovating at all. That could not be that could not be possible. But when we're looking at digital transformation, innovation using leveraging more data, leveraging what we know now with technology, effectively, this is where we see that there is a big need for insurers to move to that. So the role of a reinsurers, for instance, today is that we know that many large insurers, even smaller, are very busy to make sure that they will change the legacy system that they have. They will move to something else. Therefore, that limits their possibility for them to look at other new services or product that they could put in place. So the reinsurer role in this is to make sure we understand what is going on in other markets, bringing it to the insurers and helping them to accelerate the innovation. But also in the meantime, because there's new incumbents getting in the market, and they need to better understand how those insurance works, better understand the risk. And it's happened that most of them come as well to reinsurers to say, hey, I'm a new insurtech distributing whatever, pet insurance or life insurance or whatever. And then they come to the reinsurers to say, I need your expertise because I know what you're going to bring me is the knowledge of insurance, and then I can do all of the rest partnering with an insurer. So we see kind of a double role here in accelerating innovation for insurers, but we see also a role in making sure that we explaining the best basic, and we're giving the risk also to startup new incumbent getting in their industry.
Thanks, Emmanuel. Now that you brought up legacy, maybe I'll direct the next question to Roy and Marcin as well. It's difficult to, I think, talk about innovation without talking about legacy, the point that Emmanuel just made. So my question is, can you still drive innovation in a legacy environment? And I suppose what I mean by legacy environment is partly obviously legacy technology, and we talked about some of the cultural aspects as well. So maybe Roy, if you kick off, and then Marcin, if you can come in as well.
Yeah, I mean, I think you can. I think it's harder because you've got a cultural challenge associated to what is needed, and you also have a whole bunch of technology challenges that where things might be quite easy in terms of how you partner or collaborate. It becomes much more difficult to be able to do that. And then you've got loads of priority orders in terms of how you need to think about regulatory things that you've got to do for the marketplace versus investments for value delivery versus things that you might want to, conduct some R&D and innovation on, right? We had numerous instances this year where, we had some great collaboration and partnership that we could explore and collaborate on. And literally our legacy stack, our legacy technology essentially created a bit of a contention for our ability to move at pace. So we decided to focus our energy on actually our digital transformation, get that to an our re-platforming, get that to a certain stage where that architecture creates a little bit more flexibility and the operating model creates a bit more flexibility in terms of how you think about that, prior to us actually getting some partners to come on board in terms of collaborating with. So I think you can, and I've seen organizations do, but it can limit you in terms of moving at pace and really trying to think about the things that would innovate on your product side, your operating model, or what your customers' needs might look like versus innovative product propositions that you might want to think about in the future. I think it's possible, but I think it becomes a little bit more limited. I also think when you talk about legacy, there's a legacy systems challenge that we all traditionally think about. But there's also a legacy operating model and a culture that needs to be thought through. So how you onboard partners and how do you think about that? Rather than that falling into your traditional procurement and legal process. How you actually think about that being a bit more nimble becomes quite critical. And I think there's work for us to do in terms of how we think about that. But all your enterprise processes that you take a look at in terms of onboarding, and collaborating, and intellectual property, I think all of that needs to get revisited.
Yeah, it's a very good point, Roy, what you mentioned, because what we see that these are kind of different type of organization, but two verticals that are very important. One vertical is the digital capabilities. So that's where you're looking at the legacy, the technology, and so on. And the other one is the leadership capabilities. And then there's a study that has been made by university in a consulting company and a university in the US, where we see that the organization with higher leadership capabilities, even if the digital capabilities are not up, are the ones that are more at the end of the day, they are more profitable. So when we're talking about our legacy here, we really need to make sure that people understand that we're not only saying that, okay, you don't have the system, you cannot do that. Forget about the system, forget about the product, even the product change, forget about the operating model, but think of what exactly is the vision, where exactly, how far you want to go, what are you saying to your teams? How do you say yes to a new project that someone wants to put in place? Because sometimes it's something very simple. I'm just giving an example. So imagine an insurance company that sends you flowers when you just buy the policy. You don't need to have any specific system that will allow you to do that. You simply need to offer a simple gift to a customer and say, welcome to my part. We still find insurance organization without having any social media strategy. That looks crazy, but it's real. Like you will search them on Instagram, on Facebook, on Twitter, even LinkedIn, you will not find them because they don't have put it in place. And this is not the technology legacy, but it's really the leadership.
Yeah, no, good point, Emmanuel. Marcin, any perspectives on that?
Yeah, so I don't know if it's good for the debate, but I agree with Roy and Emmanuel on the topic. So in my opinion, legacy is one of the key factors to be considered when making, the selection of the projects you would like to go with. Especially technology legacy can be killing to some ideas. I've seen wonderful projects, ideas, use cases, which were like a no-go decision because of the factor of legacy in terms of technology. Sometimes you can do a project with a X budget, but the integration and legacy technology, makes the budget 6 times bigger, 5-6 times bigger for the project. So it's killing for the idea and business case. I would say that from this perspective, it's also worth to mention for the startups that it's good to be a wonderful startup, perfect startup, solving a specific problem. Yeah? Sometimes when you want to solve too many problems, it can be disruptive, distracting to your value proposition for the insurance companies, because it's really hard to forget about legacy, especially when you are speaking with a 200-year-old company like PZU. So we have more than 100 different IT systems in our group. So it's a very big landscape. And in terms of legacy, I would say that sometimes it can be also helpful for the project, because when you have legacy, it means that some part of your organization, some processes of yours are inefficient. So if you are able to make a satellite solution that is easily connected with some of your processes, it can be a winning scenario for the cooperation. So I very much like startups that are experts in a niche, and they are solving one specific problem that is important for the insurance company, because that means that when they are 10 times better in the process that is important for you, you will probably work with them, and even if the integration is not easy, you will make everything to go with the project.
Yeah, great. Thanks, Marcin. At this point, I'd like to poll the audience a bit on a kind of related question. So let me just put the question up. Hopefully you can see it. So similar to the topic we've just been kind of discussing around, what is the barrier typically that you're seeing in your organizations around ability to scale innovation? If you could take a few seconds to answer that. Results are starting to come in. I think the screen is real time. Give it 10 more seconds. Interesting. Actually, probably not a huge amount of surprise. Very related to the discussion we've been having around having the right culture and also the execution. Actually, the second, the one that got the least number of votes in terms of inability to measure success. I mean, that's something I think talking about. Maybe Carl, a question to you. Now, obviously, VCs, well, depending on the way you look at it, I was going to say VCs have the luxury of having a slightly different financial model, a kind of a different asset class that you don't necessarily need to measure investment return in linear terms. And of course, you bring a huge amount of expertise to help scale organizations as well. So my question is, do insurance organizations need to look at innovation returns through a fundamentally different lens? what advice would you offer to insurance organizations?
So, insurance companies will look at it differently from us. Maybe that's why we're also good partners. So an insurance company will look at it in terms of what can it bring to its, specific business areas or specific underlying insurance performance. Martin was talking earlier about some very specific applications, which is totally understandable for an insurance companies because you have very specific pain points you want to solve. From a venture capital investor perspective, we're looking at a more holistic picture in terms of what is the ability of that business to actually thrive, not only survive but thrive and really build a going concern business, both with partners but also on its own. So there is a different angle and there's a different discipline we bring as a financial investor versus an industrial investor. But as we kind of do that together, it's kind of a good, it's complementing each other well out and enriching each other very well. An insurer, when an insurer will co-invest with us, if they co-invest, will be very happy that a given investment will improve certain growth prospects or technical results or insurance underwriting performance on certain areas. And if that kind of hits their balance sheet in a much broader way, even though the business actually in itself is not generating that much revenues and profitability, that in itself is a win, right? A financial investor would take quite a different perspective.
Yeah, I share with
Roy.
Preetham, can I? Sorry.
Go for it, Roy.
I was just going to comment on the investment side and measuring value. I mean, I think one of the things that I find that if organizations don't actually think about an R&D investment consideration as almost as an ongoing means for how they operate, it becomes quite constraining for them down the road if everybody else in the market is actually moving at a different pace than they are. And I really think that it part of it is culture, part of it is the leadership, as Emmanuel had sort of mentioned before. It really does come down to organizations thinking about an aggregate sort of R&D investment in terms of the future of the business model, the future of their products, how they're engaging with customers. If they ignore that for too long and they only focus on some of the regulatory aspects in terms of what we need to do for the sector, I think down the road it becomes quite constraining and they end up spending more to essentially play. So I really think this ongoing consideration of R&D and innovation, I think, becomes quite important, critical for how organizations need to think about it.
Yeah, I would add to that. It's a good point, Roy. I mean, I like the statistic of what is 15 billion euros a year. Billion euros a year is what VW alone spends on R&D every year. Now you would argue that this is a hardware business; it's not totally comparable with a service business, but then kind of transition very fast to the question: how much does insurance spend on R&D? And if you ask that at a board meeting, the answer to that is often a very big blank stare. So people will say, we spend about 3% on average among the very large conglomerates on IT, right? The biggest banks, by the way, spend about 12% of revenues. But then there is no R&D. There is no R&D culture. There's absolutely no R&D culture. There's actually, if you want to be a little bit cynical, quite an antiquated silo mentality. I'm looking after P&C, you're looking after life, and by the way, my CEO tells me I have to be P&C profitable and life profitable. And suddenly, someone says, well, I'd like to spend $10 million or $20 million on some R&D, i.e. on some insurtech, and people are very active as to who's going to pay for that, and it's not going to be me. If you take Allianz X, which is doing a lot of interesting work on innovation, Allianz X has one of the largest corporate venture capital funds globally in the industry, and you want to allocate that to an R&D budget. Allianz X is about $1 billion, right? And so you see this extraordinary disconnect between what industry is putting into innovation versus what the insurance industry is putting into innovation. And there just needs to be a very fundamental, mind shift. If you take the banks just on technology, some of the largest banks in the world, like a JP Morgan, will spend approximately, I think last year they spent about $14 billion on IT spend. I'd be very surprised that some of the largest insurance companies in the world percent of that amount, right? So you see an absolutely extraordinary disconnect, and I think there's a lot to do in making the organizations think much more freely, much more generously, R&D, and failure to progress, basically.
Emmanuel, I think you had a point. Oh, maybe not. Yeah, so no, look, I agree with what both of you said. A few years back, I had the pleasure of visiting Pinyan, and it sort of really opened my eyes. They are about the size of, I think, AXA and AIG combined, and unbelievable how much they put into R&D. Now, there's lots you can do in China that clearly we won't be able to get away with in Europe. But I think that's kind of real life example of how quickly you can scale technology. So good. Well, let's crack on to the next question. Actually, there's some questions coming in from the audience. So let me just have a quick scan of it. This is specifically about drones. And the question is in terms of what's your perspectives around drone technology, which is obviously kind of one of the big kind of sort of growth drivers generally across the tech landscape, and is it actually enhancing public safety, and then will it have I'm adding my own perspective, will it have a positive impact on insurance? Maybe Carl, start with you, given what you're seeing in the insurtech and investment landscape.
Sure. So drone technology, we're just at the start, very helpful on, homeowners, agro, crop, security, you name it, with some and better visual recognition, risk assessment, claims assessment, immediate feedback. For us as an investor, it's very often a very interesting add-on function to the broader investment proposition, but much less so a broad investment theme. In other words, many of the companies which we look at can use drone technology in a very smart and effective way, but that doesn't mean that we would invest in actually, drone-specific driven applications only. I mean, never say never. But that has been our experience so far. Improving AI, visual recognition, thermodynamic recognition, etc. We're gonna see the drone technology ever more omnipresent on the commercial side in particular.
Yeah, I think, Preetham, if I can add, I mean, I think it's an adjunct to other capabilities that needs to plug together. So I completely agree with Carl. When I was at Accenture, we were looking at a number of technology capabilities together, where you had sort of AI, big data, and drone technology coming together. And then you shifted from selling, products to actually enhancing services and creating predictability in outcomes. A retail product owner would shift from actually giving confidence level and almost delivering outcomes for businesses from a service perspective. So I think it does have its use, but I think it has to be combined and be an adjunct to a number of other capabilities that needs to come together for it to work.
Yeah,
and I think you guys know. I think Preetham, you guys have probably got a lot of data in the claim space in the U.S. market, but it's heavily leveraged in the U.S. market in terms of types of claim surveillance, et cetera.
Yeah, definitely. We're seeing, usages in agriculture space, partly in kind of big commercial oil rigs type of environment. A little bit in personal lines, but more experimentation, I would say, around kind of SME, farm type of businesses. But yeah, very much in the experimentation stage. Any other perspectives?
If I may add, Preetham, if I may add from my perspective, I totally agree with agro space, corporate claim space. Yet you also have satellite technology, which sometimes is good enough to make the output that is required in the process, especially in agro claims. But of course, it depends on the process and the use case that you are analyzing. In terms of public safety, I have one interesting use case from PSETU that we've done together with airports. So we developed with one of the Polish startups a radar system, which is noticing drone entering airports. Yeah, so it is a very dangerous situation when you have a drone flying in the airport area. And one of the service that we offer to our customers, airports, is that we are able to detect such a situation and make an alarm on the airport. So that's one use case. In Poland, entering drones into very scalable use cases is a little bit complicated because in our country, the law says that you can operate drone only within your site. So it is very difficult to fly remotely on a big distance with a drone because it should be in eye, contact eye sight.
Thanks, Marcin. Emmanuel, did you want to say anything?
No, not on drone. I think people have covered everything, and especially the use case of Marcin.
Okay, great. I want to sort of. I was just kind of reflecting on the discussion earlier around. Roy made a comment around kind of operating model. Then we had a discussion around actually, you need almost a continuous enterprise-wide improvement engine, if you like, to be able to sort of continually, kind of keep innovating. So my question now is around actually, if I tie those two things together from an operating model perspective, and maybe Roy will start with you on this and go to the rest of the panel as well. When you're thinking about kind of core operations, insurance organizations, as we know, have traditionally been very product P&L led for good reasons. Do you think you should start, if you want continuous innovation built into the organization, yes, there's cultural change, but from an operating model perspective, do you think there's a need to move away from a product P&L to maybe kind of more oriented towards customer journeys and value streams, or is that a step too far?
No, I think I think depending on the aspirations of the business and how they want to think about it, and more and more organizations want to actually shift into more agile, more collaborative, multidisciplinary teams coming together to shift away from the functional silos that exist. I think it's inevitable that you'll see a shift into more product and value stream based in terms of how you actually execute, whether it's standard regulatory changes or change capability, or it's new innovative propositions and products and linkages back into the operating model. So I personally believe, and it's something that we're currently embarking on, where we're actually shifting from, what I would call functional silos or product P&L to ones that are more aligned to value stream driven product delivery teams, agile product delivery teams, multidisciplinary teams.
And also, I don't think we'll be separating the P&L and the other, because if you forget about the P&L, then you won't be anymore in the business. But the reality when talking about numbers, for instance, is that with the digital, even if it looks the opposite, but the customer cost of acquisition is increasing. Because there's more and more incumbents, people are already on targeting on Facebook or whatever. So what's going on for insurance today is that they need to make sure that the customer that they have today will be the customer of tomorrow and the day after tomorrow. So you will need to move from, I need to just put a lot of money in media and then getting my new customers, to I need to make sure that I will have the best experience ever for my customer to stay with me, but also for my customer to naturally recommend me to other people. So the shift will be there because of the fact that acquisition is starting to be very, very difficult. Customer understand better the product. Customer can shift very quickly to a comparator, aggregator, or whatever. So you need to say, okay, I need to improve my experience. I need to make sure I keep the customers, but also I need to make sure that I am involving in my products. Because if you're looking at life insurance business, for instance, most of the time you could be insuring someone until 60, 70 years old, but then you need something else. So this is a new market as well. So we have, there's an example of us in Spain, for example, RGA moving to the senior market, where we have designed a specific product for people that insure people until 100 years old. So where this is with kind of the element that where you don't look only on the P&L, but what is the customer journey? How long the customer will stay with me? And the example, for example, we can take is looking at the GAFA. Okay, I'm sorry to use the word. I know we fed up with GAFA everywhere, but if you look at the customer journey in digital, now it's like 55% of the customer journey in digital is owned by GAFA, because what they have done is they understood that customers have specific problem. I need entertainment. I need payment. I need to sleep better. I need to travel. And at any step of this journey of a customer, you will see that the company like Facebook, Apple, or Google, they have a specific offering for them. And this is where we also see insurance moving toward that. So in the life insurance and health insurance business, you will see insurance company offering a wellness program, where they were not offering before. They will be offering you online doctors, which is they were not offering before. They're offering services after a claim. I think, Peddanagari, you're here for the best example. You guys set up a specific wearables that when someone leaves the hospital, you get the wearables and you still continue to protect the person. So I think there will be the movement. So it's not like we forget about P&L, because we're a business. So we need to make sure everything that we done has a good business purpose in terms of numbers, but also we need to move on. Okay, can I be not only an insurer that protecting the finance of the person, but I need to be there to prevent the person in terms of disease, to help them before claims and things like that. So this is where I see the shift as well.
Yeah, by no means was I implying that we just ignore the P&L.
Of course
but I completely agree. I think it's about pace and agility, and actually ensuring that you can execute the most effective and the most efficient way possible. Yeah, I completely agree.
Thanks, guys. No, I agree. So we have one question from the audience, and actually we probably have just time for this question. It's about talent, and I'll sort of kind of paraphrase this slightly, but we're talking about accelerated innovation. How is the industry, the incumbents, kind of finding, developing and keeping existing talent? What sort of kind of issues are you seeing? And equally, there's a lot of talent coming in from outside of the industry as well, right? So what's the balance? What sort of approach are you taking towards talent? I guess broadly, both keeping existing and also attracting new talent. So actually, maybe Roy, go to you first, and then Marcin will be useful to get your perspectives too.
Yeah, look, I think this is probably one of our biggest challenge in the sector. Number one, how do we attract the right talent? And how we operate as a sector, how we operate as an individual enterprise is pretty critical in terms of how you want to attract that talent coming in. And then how do you retain that talent? So it's about, what are the important factors? And it's not always money. It's not always the package. It's a combination of ways of working. It helps. But it's also about what's your vision, what's your purpose, what's your strategy for the business, and what's your ways of working in terms of how you actually look at that, and how do folks feel like they're actually part of that journey going forward, and they've got the autonomy to be able to do that. So, for me, I think it's a big factor. We've been very, very lucky as of late, where we've hired some really strong talent into the enterprise, and actually we've purposely looked outside of the sector to make sure that we get the diversity of talent, the diversity of learnings, and the ability to be able to apply and have different thinking in terms of what that might look like and how we take things forward. So, our data science team, as an example, currently 80% of the data science team is from outside of the insurance sector, as an example, and it's proving very valuable. But you need to augment that team with the right knowledge base within the sector itself. So I think, both sides of the talent pool becomes quite critical. I think it's about keeping the work interesting, having a really fun place to work in, and being able to provide, in a very transparent way, the tools and the capabilities for the teams to operate very effectively. And where you've got challenges associated to that, bring them into the mix to be able to help resolve it. And I think if you can foster that type of culture and that type of environment, I think it can be quite fruitful to drive the retention side of it.
Yeah, I agree with you, Roy, on that one. But just only two things I want to say as well with attracting talent. I think is a big topic. Everyone talk about it, but my vision is there's already a lot of talent in insurance industry. A lot of them leave after 6 months or 1 year in the company. So we need to make sure that we find a way to make them, to let them falling in love with the insurance and letting them being the best ambassador of our companies and things that we do. And also the other challenge when talking about retaining talent, the reality of today is that whether that you're a large corporation, you are a startup, whatever you are, most of the young talent, they don't want to spend more than 3 years or 5 years in the organization. And I think we need to assume that from the very beginning. When you recruit someone, you need to make sure, you need to have a plan to know that this person is not going to spend more than 3 years. And if it spent 5 years, that's very well done. And that's just the way it is today. So either that because they're working for a large organization, I don't know, Google, or they're working for large insurers or for a smaller one, we need to assume that there will be the shift of talent. And what we have to make sure is that you can give you can give money, you can give whatever you want, but most of the people, they stay or leave an organization based on the leaders that they have. So if we train very well the leaders that are going to manage those talents, this is the best way, I think, to keep them and to attract them as well.
Thanks, Emmanuel. Right, so we're just bang on time, I think. So firstly, I'd like to thank my panelists, Emmanuel, Roy, Carl, and Martin. Really useful to get your perspectives, and I'm sure the audience found it very useful. So thank you again, and thanks everyone for dialing in, and we'll finish the webcast now.